And this evening, there's a big question on the return to Eurobond market. The World Bank has spoken. It says, do not allow complacency and business as usual to drag you to the Eurobond market. But we understand the president himself has made a firm stand, and he says that, well, we are currently okay. We will not be going to the Eurobond market. But as long as external sector exists and external shocks continue to press on, we are asking a very important and simple question on Beyond the Numbers. Can government re-enter the Eurobond market? And if it decides to do so, what will be the risks attached? This is what we'll be analyzing. And so far, what you see on the big screen is that, according to Fitch, Ghana's economy is stable. But Winston, stable enough to accept Eurobonds?
It's very too early for me to even get to that point. But we have to first of all understand where we came from. We came from no haircut. So the barber decided to take the barbering machine and give us Akura. So, but it's interesting that we've come from a very difficult moment. Government, considering several factors, previous government had to decide that indeed they have to take this decision. But it came with two factors: whether we're going to improve our revenue outlook or cut down expenditure. But we took the hard part, ensuring that we'll certainly go to revenue first sector. So we saw a lot of taxes that were rolled back onto Ghanaians, and they became a key challenge, including the COVID-19 levy and several levies that still are reflective somehow on our revenue outlook. And that journey is something that Ghanaians experienced. We saw bondholders hitting the street, demanding for their payment, coupon payments, and delayed became a key platform for controversies as to how government was ready to finance these bonds. And this, throughout the years, we've got to a point where now there are timely repayment of some of the coupons, including both domestic and international. 2024, that is when we completed our Eurobond restructuring, and that burden is still on until the end of possibly 2030, possibly. But it appears that for this narrative to come into light means that the World Bank has taken certain factors into consideration. Now, we shouldn't be too happy considering the fact that for the first part or half of 2025, the economy looks too good. Inflation, GDP, all those factors, the currency, all these fundamentals are all looking good. And it's easy for every country with this in their hand to tell investors that, yes, look at us, we are looking all good and all lively. Why don't you come and dine with us? That is a warning that the World Bank is giving Ghana. And I think it is a very wise decision, and we have to tread cautiously.
If I'm talking about dining with investors, this is what the World Bank has to say about returning to the Eurobond market. And the reason why this is important is that, we in June put out an advisory. You remember when we wrote that advisory that we think that it was not even time for government to start looking at re-entering into that market when almost all the economic indicators were on a better trajectory. At that point in time in June, the cedi was the best performing currency in the world. We wrote and put out that, advisory that it looks like, well, we may be dragged into possibly looking at that sort of alternative means of, financing the economy, especially looking at the fact that you've gotten upgrades upon upgrades from Fitch to almost, all three. Ratings agencies have upgraded the economy. But you look at this upgrade and looking at the factors that all three ratings agencies looked at, would you say that there could be something in the domestic space that possibly is currently, holding on to the Ghanaian economy, and the World Bank has made their assessment and believe that, well, don't go yet, look for domestic means to show up the economy at the moment. Maybe you return to the Eurobond market, but not now. What are you seeing in terms of what we've seen so far, the data, domestic financing, and also external financing?
So we've been locked out of the external markets for about 3 years now.
Yeah.
And then, like the president said, the economy is still, still running. And we are surprised because we are coming from a time where we used to get about $3 billion in Eurobonds every year to support the budget. So now the economy has been running without the capital market for a long time. And in the first few months this year, economic indicators are favorable. So you might think that you can go back to the markets, but then you've not entered your local bond markets yet. So investors are still not reassured that, okay, so the point is just credibility. You still don't have enough credibility to go back to the international market. And it's that simple. Because you are still paying restructured bonds yet. Some of them are not mature that you can see that we fully paid off some of our restructured debts. Also, you're not back in the local bond market yet to test whether even your citizens agree that, okay, you're creditworthy and then we can give you your money. Then you are going to investors. If you go right now, they'll price you out. They'll give you high interest rates, and then we're back in the same cycle where we can't pay our interest debts. We have to default, restructure, and then there's a cycle. So the World Bank is spot on. You have to fix your domestic your domestic resources, fix your in-house problems. So right now we are relying so much on the windfall from gold, but that shouldn't be the case. You have to fix the economy. Structural changes need to happen. So this thing needs to be set in place before foreign investors can then be reassured that, okay, if I give Ghana my money, they'll pay me back. I'm not going to suffer a haircut or restructuring that took place just about 2 or 3 years ago. And we are still not out of the woods with the restructuring yet. So it's still premature.
Well, so Winston, this is from the World Bank. It says that, well, if you do a hasty return to the bond market, the international investors will look at you as looking to find the easiest way out. And Caleb made an important point that if you really want credibility and then the fact that you think that you are resilient, first of all, test it in your local economy first with the reissuance, which we're expecting it to start this month. We've not seen anything yet, but we know the government is on track to bring back the issuance of local bonds market. Yeah. This is what the World Bank, is saying, that if you take this way out, it could mean to the international investors that you are looking at the easiest way out. At the moment, how are we surviving, especially looking at what Caleb brought in, the fact that this is currently an economy backed by gold. The last, 5, 6, 7 years, we were backing our economy with inflows from Eurobonds. Yeah. It's like now we have our own commodity, which is gold, which we are the #1 producer in Africa. You come to the world, we are between 5 and 6, right? I mean, how long can we even sustain such an economy with inflows from gold?
It's interesting to note that in 2016, 2017, the global commodity prices, especially crude oil, which was a key fulcrum for the 2027 budget, 2021 budgets, all those budgets outlook had a very drastic fall, and that affected our revenue outlook in those years. Now, if you look at where we are coming from, the warning, if you read the report by World Bank, that is the policy note, it kept advising Ghana that dependence on these key commodities due to the volatility has a tendency to affect your outlook. And it's not enough, because they keep pushing that there are many structural reforms that Ghana has to go through. As of now, the government is still 9 months in office. Yeah. There's a lot of policy. 24 hours. This afternoon, I was at one of the 24-hour economy forum. The key issue is, are the businesses embracing their policy? We are not too ignorant about policies from government. We've had 1B1F. It became a seminar, conference upon conference, but you keep wondering, where are the factories? What is the ripple effect of these policies? How are they going to be sustained? No matter how good they are, the realistic demand on the industry, on the economy, on poverty reduction is what the World Bank is saying. So if you are growing, how is the growth reflecting in poverty reduction? How is the growth affecting the cost of doing business? Are SMEs quite viable? Can they operate on their own? How is the cost of financing for banks? Are the banks liquid enough to consolidate those gains? So if the growth are not growth that are sustainable, that is the caution World Bank is giving. So if we are to return back to the Eurobond market, one would say we have not yet, we always see rain falling. So we became quite addicted to going to the Eurobond market, because when we see a little bit of deficit in our budget, we say, well, let us enter the Eurobond market. We go around the country, raise the monies. We come back. The key question is, where are these monies going? They end up being used to solvent forex shortfalls in the market, without necessarily being involved in infrastructure development, road networks, hospitals, and key facilities that are critical in poverty reduction. You go around the country, we have several billions of dollars spent on uncompleted government finance projects that are over the years being left to rot. And getting back to reinvest in those infrastructure projects end up being 3 times the initial cost. And that is the level where we've said our debt outlook has been increasing, and that is a caution the World Bank is giving to us.
Well, so talking about expenditure, Winston makes an important point. This is, if you compare our crisis year, which is definitely 2022, 2023, but 2022 versus 2025, if you look at our projected revenue, for instance, 101 versus 227 billion Ghana cedis, this is our status, has increased by more than twice. But if you look at it on the tangent of expenditure, we are equally increasing expenditure almost every fiscal year, moving from a crisis year of 145 billion Ghana cedis to 93 billion Ghana cedis. The question is, when we have such big deficit, and we understand that this year, for instance, government is going heavy on infrastructure and capex, capital expenditure, and big push has been allocated close to about 14 billion, Ghana cedis, right? You are not entering the the Eurobond market. And if you look at the budget, the entire budget, what you see is that the entire deficit, about more than 90%, will be financed using domestic means. Currently, you have treasury bills down. How do you finance such a deficit to drive growth like the Big Push initiative, which is very fundamental to the progress of the 24-hour economy?
Well, so the Big Push, it has its own funding sources, which is from our oil revenue. So, and that's a different conversation for another day, because you know our oil production will be coming down, 5th year in a row, coming down, and the oil prices too are subdued for a very long time now. So that's a problem with financing the Big Push. But then, personally, I don't have a problem with infrastructure funding, because that's what you need to grow the economy.
Absolutely.
But if you look at a breakdown of our expenditure, majority goes into consumption. And then not just consumption, but then wages and salaries. So wages and salaries also, every year they increase. Every 4 years, we have a major increments where the outgoing government increases their salaries and all of that. So you should know that majority of how much we are spending this year will increase next year, next 2 years, mainly because of the consumption component. So if we find a way to improve our revenue side by employing more Ghanaians, creating an avenue for private sector participation, all of that, that's where you can increase your revenue through taxes and all of that. At the same time, if you are spending on infrastructure projects, these projects, they pay themselves. Because
they must pay them by themselves, right?
Exactly. Because if you build a road, there are so much economic activity that can come out of that, and that generates revenue for the government, and the government can, again, spend on this consumption and all of that. So finding the balance is the problem, because we are too heavy on the consumption side, and we forget about the infrastructure and then investment side of things. So if we are spending more on the infrastructure and the investment and things that can pay for themselves, I'm all in for that. But if spending keeps going to SOEs that keep, mismanaging their books, and then we have government have to come and bail them out later on. And if you read the World Bank report, they flagged 2 main sectors, the cocoa sector and the energy sector. These were the 2 main sectors that the World Bank says it's one of the problems that Ghana is facing. If you can fix these 2 main sectors, we have a foot forward.
Caleb makes an important point about the 2 problematic sectors. And I have always said that the energy sector of Ghana is a debt-making machine. If you don't tackle it when you use business as usual, you will find yourself in deep, hot waters. And we understand this year, for instance, government has had, some form of relief because they've been able to introduce a levy called the 1% additional levy on the export price of fuel, which is now funding the purchasing of fuel to actually power thermal plants. And because we did that, we've not really seen doomsday, in the last 4 or 5 months. The light has been very stable. But of course, we understand ECG is also requesting for an increase in their distribution service charge and all of that. But the question is, we've had debt restructuring. The Eurobond market is a market that gave us the most significant haircut in the entire debt restructuring we did, if you take away what the Bank of Ghana did for us, right? The question is, what have we done so far with the relief that we got? The relief was supposed to drive growth, and we spending it in strategic sectors, pro-poor initiative, social sectors, and all of that. But we've done about 2 years of debt restructuring. The question is, the relief that we got from the restructuring, what have we been able to use that relief, for? Huge haircuts that we got from the Eurobond market. Bank of Ghana gave the government some huge relief, and as a result of that, Bank of Ghana is in a negative equity at the moment. What have we used that money for, Winston?
That is a very brilliant question, and that is a question that I wish we could have the experts, not just the expert, the government themselves, and ask them. And that was one of the key questions I asked the previous finance minister, who was Ken Ofori-Atta. I asked him this question. I still recall that we have been taking these Eurobonds, IMF monies. What can we say the money has done? Or apart from saying we have credibility in the international market, meeting our target consistently after every review assessment. But we have also seen some kind of development since 2025 about how these targets are being met. But the reflection key question is how it looks on our books at the Bank of Ghana and its subsequent effect of ensuring that our reserves are quite good. But my key question, which I want to see the revenue part of the slide, which is very important, is that we have over the years said that we are doing very well in 2025, 227 in terms of our target for 2025. One caution the World Bank is telling Ghana not to do is what we did previously. The moment we hit oil in 2010, in 2009, 2010, we straight away went to the Eurobond market and decided that we have enough buffers to raise enough revenue from our oil. So it became kind of a transactional outlook that look at us, we have oil, we can make sure we pay our debt obligations consistently. And we ended up going to the Eurobond market, no matter the rate, we were getting the monies. And that became our burden because we failed to build that sustainable economy to refinance those debts. And that is the caution that is being given to Ghana again in 2025. We're expecting about 250 metric tons of a million metric tons of barrels of oil from the Pecan oil that is likely to come into stream in 2026.
That's an important point.
That is very important because if we still, and that is going to be the highest oil we're going to receive as a country, backed by the one we have at Tano and 10 and Jubilee as well, because this is going to enhance our revenue outlook in 2026. And that should tell you that if you look at it from an investment perspective, we are good as a country and our future looks brighter. But the caution is this: if we go too early, it will affect us, our ratings. Right now, the B rating that we have from Fitch is just still speculative. That tells you that the risks are still there. The risks are still there.
We are still very fragile.
We are still very fragile.
Yeah.
Exactly. The Bank of Ghana is still intervening in the market. There are still certain things that are still happening behind the scenes. Businesses are being too cautious. We still need to get to a point where the key policies that the government have said they are going to do are indeed yielding results. The agri sector, the energy sector, the industrial sector, the big push. If it is pushing, let us see whether the push is really pushing. Just as we said, I thought was really forcing. Can you force it, laugh?
Well, so, I mean, important point made by Winston. But let's look at our Eurobond history. This is a place that we've gone, over the years for huge sums of money to back the economy. 2018, when the Kufuor came to office as first term, almost everything was on a very, very good trajectory. Like we are seeing now, inflation was coming down at a point. We even had single-digit inflation in 2019, I think so. Yeah. Then we saw GDP, debt to GDP ratio coming down. Our reserves were increasing. And based on that, we went ahead to do road shows, got $2 billion, additional $3 billion in 2019, and $3 billion in 2020. But there was some sort of negative signal that we sent to the market when we almost went to the market twice in 2020, right? And that negative signal was that Ghana wasn't stable at that moment because, in 2019 or so, we were able to issue, was it 2019 or 2020, we were able to issue a 0%, a zero coupon bond, which means that, and we became a trailblazer in the Eurobond market. And few years later, we had to go and beg for restructuring or haircut. That tells you that if you don't consolidate, you will end up having some of these issues, especially if you look at what happened in 2021, when almost everything looked very, very positive until we decided to try the market twice and possibly go for a bond which was more than, we were even talking about century bonds and all of that. That sent negative signals, and by 2022, we were out of that market. But the question is, when do we even return, right? This is the projection we are getting from the IMF. And of course, this is indicative, right? If you look at inflows from the Eurobond market, the IMF puts 0 in their estimation in 2026. By 2027, they started putting $1 billion, right? Which is even smaller than the average we've done over the years. Caleb, my question is, do you think that we may be tempted to go to the market by 2027, especially when around that time the IMF is away? Are we likely to see that? Because the Kufuor administration went to the Eurobond market in the year when the IMF was exiting, 2018-2019. So as soon as they exited, they found it good to use that sort of positive indicators they built over the years to go to the market to borrow. Are we likely to see this? Or maybe we'll stand on what Winston said. Pecan is bringing in more. Gold is still very attractive. Are we going to focus on this too? Or we may be forced to go to the market by 2027?
So the next year, 2028, is an election year. You know what happens during election years as well. So it depends on the government's approach. What the World Bank is advising is that we focus more on the structure of the economy. Because once you change the structure of the economy, other things will flow. Once the markets believe that, okay, if I give you money, you pay back, you can have your zero coupon interest rates again, your zero coupon interest rates again. Once that happens, you've built your credibility back, and then you can go to the international markets stronger. But then if you just go prematurely, definitely you're going to get high interest rates. And once you get high interest rates, and if it went under the IMF program, that's not going to happen. But then once you get the high interest rates, paying back, you're not generating enough revenue to cover the interest rates you're going to be paying every year, and then eventually pay off the coupons when they mature. So the main problem is about the structure of the economy. And then there have been so many policies so far, the 24-hour economy, 1D, 1F, so many policies that are supposed to change the structure of the economy. But then one of the major things that's preventing that is our institutions. Because if you don't have strong institutions, you can have all the policies you have, nothing's going to happen. Like the Fiscal Council that is going to be implemented very soon. There was a Fiscal Council in about 2019, and then we went to the IMF in about 2022 thereabouts, because institutions are not working properly. Once your institutions are strong enough, independent, and then working as they should, and the structure of the economy also changes, we shouldn't be seeing these problems anymore. But then the problem is the structure of the economy remains the same, and then our institutions are not working as they should, independently as they should, and then we keep going to the cycle where they have to bounce with the politics and all of that, and then it just takes us back to where we are. That's why we are currently under our 17th IMF program, because we don't learn from our mistakes.
This is the reason why many possibly are saying that, well, the positives you are enjoying now may be a bit inflated. Why? Because of the reliefs you are getting from the debt restructuring that the SY administration did, right? Let's look at the red, bar is the pre-restructuring, our debt servicing obligation, Eurobond external debt financing gap, right? That was in red. You can see it was very, very elevated. And this year, which is 2025, was expected to be one of the difficult years for government. Now, after the haircuts and the restructuring, what you see in blue is that sort of gap has been reduced and the burden has also come down. And many have said that, well, because of the restructuring, you may be tempted to say that you are on a good trajectory. But don't forget that you have a moratorium that will end 2026. Don't forget that you enjoyed about 30% haircuts from Eurobonds. Don't forget that your own central bank had to come in to bail you, which of course the central bank is still currently, struggling because of that. Now, if you look at all of these factors, is it so difficult to say that because of some of these reliefs, where we are at the moment still looks very slippery, although we have, import cover of near 5 months.
Yes.
Where gross international reserve has exceeded $10 billion US. But the question is, if we were paying the debts, would we have been able to get there?
No, we wouldn't have. We wouldn't have even be seeing inflation coming to that level. The moment we start going to the external market, there'll be a lot of pressure on our domestic currency, and inflation is going to go high. We're going to see food prices going high. Don't forget, the bag of rice was nearly 150 Ghana cedis. And don't forget, if you go to the market, food prices, the rate of increase of food commodities
1,500
exactly
right?
kept increasing by the week. You go and buy Milo today, the next day they tell you Akosoro. A Milo seller will tell you dollar Akosoro to be Milo Akosoro. In context, the Milo price have gone up because the dollar exchange rate has gone up. So it became a key conversation during this period, how price volatility became a key concern for the country. But we realized that the central bank in this recent time has been saying that dollarization should be cut off, and therefore there was a need for the use of domestic currency in every form of transaction. And that kind of put in some form of optimism in the domestic market. But still, the risks are all quite standing or staring at us in our faces. And let's see whether the government will go. But like policy, politics, and economy, the economy can say don't go, but politically motivated individual can say let us go this direction. Don't forget, we said we will not have a car, we had it. So politics and economy will still be assessed, and we are here to assess the numbers and still cautiously advise government going forward.
World Bank has every data, and they are aware that debt servicing obligation will be elevated, especially from 2026, 2027, especially when the bilateral moratorium ends. You have the final comment. How challenging would this be, especially looking at the external outlook? And do you think that maybe because of this, we should still remain, at some corner B somewhere, try and use T-bills to solve our problems, maybe, than going to Eurobonds?
I think the main reason we got the debt restriction and moratoriums and IMF bailouts was because once you get these things, you don't have to focus too much on servicing your debts, but then you can focus in-house and implement structural reforms. So once you leave the program and once you leave the debt restructuring period, you are in a much stronger position to repay your debt. But if you don't fix these problems while you are in the situation, when you leave, it's going to be worse. Which is why we keep going to the IMF program cycle after cycle.
Well, so we are leaving you with this from the World Bank, document says that postponing re-entering the Eurobond market until fiscal stability is firmly established. And that is very, very instructive from the World Bank to Ghana. But of course, the president says that, well, I'm not going to enter the Eurobond. Gold board is already giving me so much. Why do I have to enter the market? But also, Pecan Energies is coming on board, and the World Bank is saying that maybe this could lure us to enter in the market. But the decision lies in the hands of the president, the governor, and the finance minister. This has been Beyond the Numbers with me, Isaac Ofieje. I did this with
Winston Taki and
Caleb Ziblin.
See you same time next week. Goodbye.